occupiers, it will create uncertainty. I think the worst economic decline projection I've seen is around 1.5%, but driven to avoid recession. I mean, it obviously depends what the occupiers do, but the London market per se at the minute is very tight market, so very limited supply. And even through the first 6 months of this year, there's been a lot of activity because big corporates or smaller corporates who want to get space, when they see that opportunity, because they are rare to come by, they have gone for it. So they've ignored what's been going on politically, shall we say, for the last 6 months. Now, or from now on, it depends, I guess, to a degree, or to a strong degree, how much of your business is based in the EU, how much of it will continue to be based in the EU relative to what is for the domestic economy. And that, depending upon which side of the fence you're in, you're going to be making different decisions. So if you're still strongly UK focused, then I don't see those decisions particularly stalling or stopping. They may see it as a good opportunity to go into the market while other occupiers aren't there. And the economic growth forecasts are not that amazing.
We've studied the capital flows, and normally capital moves a lot faster than the occupier market. Here it may be different, because I think investors have a little bit more of the luxury of sitting on the sideline, even though the way that capital in their pockets is not doing any good. But the big occupiers are really going to have to make some quick decisions. I mean, if you're a big bank out of London and you're going to have an EU presence, you're going to have to move fairly quickly if you're going to have to look at being up and running in 2 years. I mean, just the build out. And, if you wait too long, how many 200,000 blocks of space are there? Well, Frankfurt has quite a few right now, but that could get eaten up pretty quick. Dublin is, but, you don't want to be the last one to the party. And so I think that we could see some hedging and some big leases coming out, and these big firms could move fairly quickly on that side. It'll be interesting to watch.
Yeah, a lot of the banks have already started to move out of the city. So some of them have gone to HSBC, have gone to Birmingham. In the UK, I mean, they've already outsourced a lot of functions back office to Central and Europe for the last 10 years. So they're accustomed to how to set up a platform which is geographically distributed. It's now the client-facing side, but I think they could move quite rapidly. And all the banks are currently meeting to discuss how we're going to deal with this.
But they still need the space they can move rapidly, they just need to make sure they have the space to do it. So.
And a lot of their employees will be EU nationals as well, won't just be Brits.
And if I can add to this, but overall I think it's going to be a little bit less dramatic than people make out. If you look at the newspaper, in some newspapers you could believe that tomorrow all the bankers in London form an orderly queue at Heathrow Airport and then fly out to somewhere else. And we've done some research into the realistic areas they could go. Frankfurt is a wonderful city. It has 734,000 inhabitants. 358,000 is the employment population only in financial services in the city of London. So even if they leave their family at home and everything else, the city of Frankfurt would have to increase by 50% in population. That's not something that can be easily accommodated in a restrained residential market. So Frankfurt would love to have it, and so would Paris. And they too are going to fight it out, because while both countries like European integration, nobody wants the financial center to go to their historic opponent. And so if you look into Paris, it's a high tax environment. It has very strong worker representation, very strong limits on working hours. If that sits very well with Anglo-Saxon banking culture, I would like to question as well.
I think Dublin's got one of the best bets.
Yeah.
It's got its own sector that it has been built. It's tax efficient. It's got its own structure, and it's Anglo-Saxon. It's English-speaking. It's got very strong ties with the US.
Can I just say on that point? So with the city, they're going to lose euro-denominated transactional business.
Maybe.
Maybe. And that's assuming the euro survives. In 2 years, the euro might have changed itself dramatically. So, there may be no need for these people to move anywhere. That's the first point. The second point is, if they move to Dublin, they're moving there because it's English-speaking, firstly. Secondly, it's tax advantageous, as you said. The role, or the European powers that be want to erode any sort of tax advantages and harmonise the tax law within the Eurozone. So suddenly that competitive advantage of Ireland is eradicated overnight as soon as they make that rule. Now, that is the very reason why countries don't want to remain in this sort of entity, is because once you take away a country's competitive advantage, there's no reason for them to compete. And Dublin and Ireland has benefited dramatically over the last few years because it's been able to set its own tax laws, and that's attracted a lot of business. As soon as Europe depletes that ability, they will have a referendum and they'll be out of the Euro or the EU or whatever. So, one has to be careful and think ahead. It's not just a knee-jerk reaction to, what's happened in Brexit.
Yes.
Yeah, I mean, it just kind of begs the question that, London's been a banking center for centuries before the EU. Why are you guys assuming that it's going to leave? My money is it's going to stay.
It's only euro-denominated transactions, by the way, that will move. They'll only move teams that are specifically focused on euro-denominated transactions.
I wouldn't even go that far. They
I'm
will
not so
move
sure.
the absolute minimum of people to comply with any demanded regulation. And maybe I'm very bullish, but moving a well-integrated market is incredibly difficult. You can't simply send a few bankers there, because then you need all the advisors. The advisors need a high qualified background of staff. It just doesn't move that easily. If we look, the most realistic case that we have is Luxembourg, where all the big investment decisions are taken by directors who are directors of 126 firms. The work is done in London. Somebody sends the document to Luxembourg, and there a very well-considered decision is made over a big lunch, and then the work continues in London. And I have a feeling that much of this is going to stay the same.
Well, it's not just the banking sector. I mean, there are a number of, particularly American companies, that use London as their bulkhead for all their EU operations outside the financial industry. Even my firm, we started out in The Hague. Employment laws kind of drove us to consolidate it more in London, and we could hire people from all over the EU and move them to London with all the language skills we need. Now that's a little in question. So there are a lot of firms like that won't be able to use London as their beachhead for all of the EU.
Where would you consider moving then?
Well, we just opened an office back up in Amsterdam.
But that was before Brexit.
That was before Brexit.
So,
and more opportunity.
where
I
would
would
you
look at probably Germany just because of where our marketplace is, and I'd also look at, okay, if the EU's going to break up, do I really want to be in France or Netherlands and have that risk too?
Right.
So that's why I think it favors the German cities and Dublin.
Right.